Good morning, ladies and gentlemen. Welcome to the Likewise PLC investor presentation. Throughout today's recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time just using that Q&A tab situated on the right-hand corner of your screen. Simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during today's meeting. However, the company can review all questions submitted today and we'll publish those responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and I'm sure the company will be most grateful for your participation. It gives me great pleasure to hand over to CEO Tony Brewer. Good morning, Tony.
Good morning. Thank you, Mark, and welcome everybody, and thanks for joining this presentation. Just starting with the first slide, you'll see a pretty impressive truck and trailer there. We've had 3 of those delivered over the last 3 months, March, April and May, helping the capacity of the group, particularly on the night transfers. And then over and above that, we have 32 new trucks coming into Likewise during the course of the year, and including those which we had in the second half of last year, 20 new trucks into Valley. So, significant investment to improve the fleet and the delivery service to our customers. So, as you know, I'm sure that the business is focused on the product development, sales, marketing and distribution of flooring to independent retailers and flooring contractors. With the additional site that we acquired in January in Plymouth, we now have 12 distribution and logistics centres, and I'll demonstrate during the course of this presentation where we have additional capacity. We now have 87 key suppliers of general flooring products, which includes, of course, carpet, residential vinyl, laminate, luxury vinyl tile, artificial grass, commercial flooring, adhesives and levelling compounds and other flooring accessories. And very importantly, 96 executives who are very much focused on our customer needs, as are the rest of the employees within the business, and 144 delivery vehicles offering that next day service to our customers. We've now increased to 545 staff, and a huge majority of those, of course, the management, the sales teams, the internal sales, warehouse staff, delivery drivers, many of which have long-standing floor covering experience. And we continue to increase our market presence with displays and sampling going into retailers. And that culminates in having just over 7,000 customers across the business. And whilst we'll report sales revenue of 150 million for 2024, we are heading towards that original target of getting through 200 million, and we believe we can now look forward to exceeding that in future years. So in terms of the results for 24, the group's made really strong progress, particularly in the last 8 months. But overall sales revenue for 24 up 7.4%. In Likewise floors, a very substantial 15.5%. And whilst we are competitive in the marketplace, no question about that, equally we are not buying market share, and we see a slight improvement in our gross margin, as you can see, up to 30.7%. The underlying EBITDA, which is a measurement used in some of the financial circles, up to 8.8 million. Profit before tax down slightly, but that reflects the additional investment we've made, particularly in our sales teams during the course of last year, and particularly in H1. And importantly, a positive cash generation of 7.2 million. So the overall dividend now has been increased to 0.375 pence, with a final dividend of 0.25 pence being proposed. As I've said, last 8 months particularly, and if we take the 4 months of 25, increasing by 10.2%. But taking into account one less working day so far this year, the actual like-for-like increase is a very impressive 11.5%. And what's particularly important is that sales revenue now is consistently exceeding 30 and going on 14 million, which is where we see an improved operational gearing and subsequent profitability. So in terms of the income statement, we've given you the key numbers, and I think probably one thing to look at is that non-underlying. As the group through its formative years has been moving out of old sites, restructuring the business, incurring dilapidation costs and other restructuring costs, dual running costs, and that's why we've had to use that non-underlying column. But as the business is much more strongly positioned now, I think going forward, the only costs we'd expect to see in there is probably the setup costs in the southwest in Plymouth, and the additional marketing costs that we do to accelerate our market share and growth. And the balance sheet, I think the key numbers to pull out there are we now have, including the benefit of the Plymouth site, 23.5 million of freehold property with just 2.3 million of debt against that. The cash and cash equivalents reducing year on year, but that's wholly to do with the 4.3 million deferred consideration on the acquisitions of Valley and of Delta. So overall, the cash generation is positive, and I think a very solid balance sheet and gives us the foundations to continue to grow the business. The sales line, as you look at that blue line for 2024, very consistent and solid performance from January through to August. But there, after that, you can see in September, October, November, the business really starting to accelerate with some pretty positive increases, with the final quarter being 10.2% up as against the total year 7.4%. And then you can see clearly going into 2025, that acceleration continuing with some strong performances, and actually the growth has accelerated each month from January, February, March and April, with April being 14.2% up. So a very strong performance. And obviously it's not all about the sales, of course, but it's that key volume that then creates that operational gearing and the improved profitability we've seen, which gives us confidence in the market forecast for 2025 being a real step change in the overall performance of the business. And I guess this is a pretty impressive slide of our management team. There's a cross section there and a balance of experience, but also some really good young people taking management positions literally in their 20s, 30s and 40s, plenty of experience being gathered, but really exciting careers ahead for this team of people. And then touched on our sales team, those 25 management who are very much product and customer focused, but the 71 external salespeople, literally visiting our customers on a daily basis, positioning new product and point of sale, and then supported by the 50 internal people with a wealth of experience and appreciating very much our customer needs. In terms of the point of sale and market presence, a myriad of displays there you can see, whether it be laminate, engineered wood, various derivatives of luxury vinyl tile, residential vinyl, and of course various carpet ranges. Important strategic moves that we made in the autumn of last year with two key suppliers now, one Associated Weavers in carpet and Unilin in laminate. We've had very good relationship with these suppliers for many years, not done business within likewise for a variety of reasons, but now the timing was right in the autumn to launch product, and we're experiencing a lot of success even in the formative months on those products. And then just literally last week, we've launched to our sales team a product from Carndine. Interestingly, Carndine came to us asking us to distribute this product in conjunction with themselves. So we've just launched the Palio product, and really good feedback from our customers, and with the number of display stands we're already getting commitment for. And then the Lewis Abbott premium carpet products we launched again in Q4 last year, getting some good traction on a number of the products, and that's an exciting part of our future in that premium end of the carpet market. And two other key products here on the left-hand side from a new partner, Chrono Swiss, a laminate product, but also excitingly the engineered wood that we've now launched, and again good traction to begin with on that product. That's a completely new product category for likewise. And then in Valley, historically Valley have relied on sample books and been very successful with it, but we've now put hardware in particularly in the second half of last year with lecterns, 8-bay stand, and just about to be launched the laminate stands to expand the Valley business. In terms of the infrastructure, I think this is a very important slide in how we've put the business together. So we started in 2018 when we acquired what is now likewise Matting based in Sudbury. But thereafter, as you can see from the dates on that slide, everything else has been achieved since the beginning of 21 when we moved into the new distribution centre in Leeds. We followed that up with Glasgow in the spring of 23 from small premises just around the corner from that large facility we have now. Newcastle beginning of 22. Manchester we moved in the summer of last year, 24. Birmingham was operational during 2022. Sidcup the beginning of 23, and Newbury the summer of 22. And of course the acquisition of Valley in January 22 with their 3 locations, and then more recently Plymouth completing our full coverage of the UK. But I emphasise, there's £23.5 million worth of freehold property there with just 2.3 million of debt, 50% of our capacity given some of the larger centres that we own, and it just gives us a very firm position on our balance sheet, an opportunity to expand the business for the future. And this is the network that we now have within Likewise Floors, with the 3 main hubs being in Birmingham, Leeds and Glasgow, where carpet, residential vinyl and artificial grass are stocked and then distributed, and each of those lines represent overnight movement of trucks for then unloaded in the early hours of the morning, loaded onto our outgoing delivery trucks, therefore giving our customers a next day delivery service. And similarly, the network within Valley, where currently the main cutting is done in Erith in southeast London, but we're just about to start cutting in Derby as well to give us more capacity within the Valley business. And that just really demonstrates the overall network and the geographical coverage that the group has. It's just a simple chart just to show where our capacity is. We've just started the second shift within the Glasgow business, literally in April, giving us extra capacity. Leeds, further capacity, and we've literally just ordered a new cutting machine for the Leeds business. That's a large 5 metre wide carpet and vinyl cutting machine. In Derby, as I've said, we're about to start cutting there, an opportunity to start one shift and follow with a second shift as volumes require. And then Newport, we're just in the process and hopefully at the later stages of obtaining planning permission to be able to extend that facility. And again, we've ordered the cutting table, and we're soon to order the racking, and that would be planned to be operational realistically in Q2 next year. It's just a simple diagram of the Newport extension. You can see on the left-hand side, the lighter grey is the existing facility, which is 35,000 square feet, with the top part being the planned extension and with raised loading bay to give much better material handling. And that's a 60% increase in capacity within the Newport facility. And then geographical coverage, I think it's fair to say that Likewise is now pretty well covered across the whole of the UK. Plymouth literally became operational earlier this morning to cover the southwest, and similarly in Valley extending out, and we'll just cover those areas just in the mid and the south over the coming months. I just thought I'd bring you back to that sales graph because I think it is so important that, again, you can see through 24, a good performance, the seasonality quite consistent, a nice growth year on year, but really accelerating through that September, October, November, and then very much carried forward into the early part of this year with a very strong performance in the first 4 months, which, pleased to say, is continuing in May as well. So just summarising, I think we made significant progress since 2021. We're moving into the Leeds facility, being the real start of Likewise Floors accelerating forward. And I think we're benefiting in the last 8 months from all the foundations we've laid over the previous 4 years. Whilst the sales are accelerating quickly, we have logistics capacity to cope with that. And as I've demonstrated, we have excellent management teams across the country in our various operations. And I think it's fair to say really significant support from our suppliers, and obviously our customers are extremely important. And we believe there are lots of opportunities within the UK flooring industry to continue to grow our business. We're not there yet, but we believe that 200 million is well in sight, and certainly the infrastructure that we have, particularly with the additions of what I've talked about in Glasgow, Derby and Newport, notwithstanding the other operations, we can certainly go through 200 million. And I think now the board is looking to say, what do we need to do to invest to get through that 250 million and beyond. Thank you.
Tony, that's great. Thank you very much indeed for updating investors this morning. Tony, we've had a number of questions from investors, both ahead of today's meeting and during your presentation. So firstly, thank you to everybody for your engagement today. Let's just start off with the first question. Do you think that joining the main market from AIM would increase exposure to institutional investors? And is there any future ambition to do so?
There isn't any plans to do that. I think the benefit on AIM, of course, with IHT is particularly helpful, and believe that it's all about, in terms of our rating, in terms of improving the profitability, which we're setting to do, and we believe the objectives before us for this year and the analyst forecasts are deliverable. And I think if we can do that, and obviously the signs so far are very good, then our rating will improve subsequently.
Great, thank you. There's a number of questions both ahead of today's event during the live presentation around what you're going to do with the free cash flow. Would it be debt reduction, perhaps further share buybacks, dividends, acquisitions? How do you see that shaping out?
Okay, well, we've launched a share buyback this morning, committing £250,000. So that will unfold over the coming days, weeks. And we'll just keep that under review for future share buyback. And as we've said, in terms of the investment in Plymouth, where we've acquired the freehold, and the fitting out of that's done through our own cash resources. Similarly, the plan is with the Newport extension, and that's within our budgeted cash flow to fund that. And at some point we'll make further step changes, I guess, in how we invest in the business and deploy that cash generation. In terms of acquisitions, we can never say never. My phone rang this morning, not with an acquisition, but somebody talking about M&A and what we're planning to do. I think we would consider the right acquisition. If we go back, obviously we had the original acquisition of William Arms and created likewise matting. Heat seam factory flooring was a step change for us with acquiring that business in Dewsbury in 2019, and then moving, of course, to the Leeds facility in 21. And of course, Valley was a massive move for us to establish that. I think it's fair to say, would we pay lots of goodwill to build the group? No, I don't believe we would. I think if we had opportunities for asset-backed acquisitions, we would of course consider that, or anything else we felt was of a strategic benefit. But our focus is very much on continuing to grow the business and invest in the sales teams. We've added 18 new sales execs in the last, since the beginning of 24, so in the last 16 months or so, and we continue to consider opportunities to invest in additional people, but not pay huge amounts of goodwill.
Great, thank you, Tony. With the addition of supplying cardine ranges, do you have any other leading flooring brands to be added to the portfolio, such as perhaps Quickstep or any other brands?
Well, interestingly, the Vitality product that we launched in the fourth quarter of last year is from Unilin, who are the manufacturer of Quickstep. So there's not any immediate plans. I think we're doing really well with Vitality, and we'll continue to build on that. There's nothing specific. I think having taken Associated Weavers and Vitality from Unilin and Cardine, that was three key players that, for the variety of reasons we weren't previously working with, that we now are.
Thank you once again. Obviously, I know you touched on the 200 million of sales target, but how realistic would it be to hit that milestone within the year of 2026? We're being asked.
I think a bit early for 26, but I would say over the next few years we should be hitting that target.
That's great, thank you. Let's take to a question here. Obviously, we've touched on further acquisition, so let me jump past that one. Given your strong property ownership and low fixed debt, is there scope to unlock value from your property assets to maybe accelerate shareholder returns, do you think?
No, we have no plans whatsoever to sell our properties. We would rather add to that rather than sell any. And Sale and lease back, no way, no possibility.
Got a question from Mark. Mark, thank you for your question. What does the board's view as a key potential threat from LFL growth, other than, I guess, the macroeconomy?
Well, as I've said, we've invested in the business. We believe we can grow the business organically, if that's what the question's pointing at. So absolutely, we keep putting new product into the marketplace, lots of point of sale. We're continually pushing our management and sales teams to put more point of sale into retailers, and that's what will fuel our like-for-like growth.
Great, thank you. Question here around, I guess, expansion in the market. Is your growth outlook weighted more towards expansion of market share from existing regions, or perhaps a deeper penetration into newer territories, perhaps like Wales or South Wales?
Well, South Wales, we're covering both from Likewise, Delta, and importantly from Valley. And obviously the step into the southwest of England, into Devon and Cornwall, is actually really starting today, because we were running 2-day deliveries from South Wales into the southwest until today, and now we're running a daily delivery service. So that's stepping up. I think we've pretty much got the UK geographically covered. It's now there are areas where we should increase our market share, market position.
Tony, that's great. Thank you very much indeed. There are a few other questions that I know we've kind of covered either in the presentation, or perhaps what we can do is I can present those to you post today's meeting. I know you've got a busy schedule of investor presentations, so what I'll do, Tony, if I may, is just come back to you for a couple of closing comments before I redirect investors to give you their feedback.
Thank you.
So, Tony, thank you very much indeed for your time today. If I could please ask investors not to close this session, as well, I'll now automatically redirect investors to provide you with their feedback in order that you can better understand their views and expectations. Your feedback will only take a couple of moments to submit, but I'm sure will be greatly valued by the company. On behalf of the management team of Likewise Group PLC, we'd like to thank you for attending today's presentation and wish you all a good rest of your day. Thank you for joining us this morning.